I want hot set because
Tony,
it's
Tony,
the echo. I'm on my phone. The echo when I'm logged into both of them.
what
Shoot,
face
what
did
was
you want
all
to
that
make
about?
when we build it?
Um,
Angry faces, happy faces, angry
okay,
smiles,
here it is.
or angry. What faces do you want? Make
UJ push.
this is this is
I wouldn't have missed Miss Sharon if she got back on, cause she would have benefited from this. There go her entry right here.
I'm here.
Oh, okay, there you go. If you look at UJ, well, we'll have Daniel pull it up when you get a chance. Pull up UJ real quick before you dive into your
Gotcha.
chart.
All right, this is the hour. This is the hour chart right here. This is my official markup, my official bias.
Go to the 15 for me. I just want to show her where the entry would have been. Okay, you see how we're starting to get that big nice candle. Miss Sharon, zooming in for me a little bit, D. Okay, this next we got 3 minutes before another candle forms. If we get a nice push right here, we're looking to go ahead and enter to the downside on this next candle. So in three
Okay.
minutes, yeah, that's what it'll start looking like. So you see how it's starting to kind of
Yep, I see
engulf.
it.
I guess I don't want to say engulfing because it's
It
not a
might.
single candle, but it's starting to push past that previous bull candle, that big green candle.
Hmm.
Like
I
But
see it.
we always stay patient though, so you don't take it on this candle. You wait for the next candle. You wait a couple minutes into the next candle to see if it's gonna continue down. If it continues down, then you can go ahead and take the trade and see if it'll go ahead and push, and you put your stop loss above that wick of the bull candle or the green candle.
Okay.
What we
Okay.
gonna say, D?
I'm listening. I'm listening, bro.
Oh, no, I thought you had some input, bro. I was
Oh
just trying to
yeah, I had a little bit. Like
shoot away.
it's, you know, you are correct. You know, you know, being more cautionary. I will wait for the next one, and at the same time, like on a more advanced level, someone with the eyes would have seen that right here, this level of support and resistance was already past the 50% mark of this bullish candle, and then would have given another 25 to 50% of the same candle. Like this right here, I would have called a clear indication to take the trade to the downside. This is the zone of the trade. That's I would have called that like that. But we do
Can,
have we
can
do
you say
have a
that one more time? I'm
um
sorry.
which
Can
part?
you say that one more time?
Which part?
The part of where you would have took that trade at the middle. Can you explain why you would have done it there? I mean, why would that be a sign that to take that on the down?
All right. Well, first off, it broke a previous support and resistance, and
Okay.
then second, it bounced off divergence. Well, on a higher time frame, it's bouncing off. And then third, you have well, so I'm pretty sure that the admin will start going over it sooner rather than later. We have volume to look at, and actually volume like this is what we're looking at right now. What's happening is volume and price action that's giving us our ultimate confirmation. And then we have other confirmations like look at continuance still going strong.
That was sauce, man. We caught a nice little rollover. I don't mean to intrude, D, but Yeah, I'm gonna definitely go a little bit more into the volume aspect of it, and that was a good point out that it broke that SNR level. So it broke Miss Sharon broke the floor. So that's why you start
Okay.
seeing the increase of the momentum, and it's starting to push down a little bit more. We're still not in clear water because if we look to the left, we got a little congestion coming up. So we want to see this push continue. It's starting to pick up momentum, and we want to see this fade continue to the downside. But this is kind of a decision point right now. We're gonna see what the candles give us, and we got another good 14 minutes on this candle. So um, we just kind of monitored it. Like right now, we would already be in the trade. Um, Gold gave us an indication that this was going to go ahead and flip, so I had him to bring up this example. But yeah, my bad, D. I don't mean to.
No, it's
True.
all right, bro.
So
Hey,
gold, because it's owned by Japan, would
No,
either
no,
indicate.
don't use that theory there, Reddick. I'm sorry, but
that's
Okay.
not funny.
they do have what we call a correlation. So or an inverse correlation. So when gold goes up, USD
Yes, it
JPY
goes
goes down.
down.
Yes,
Gotcha.
no. There is a theory that that Japan has all the gold. I mean, both of them are gold weighted currencies, USD and JPY. So when you see gold go up, both of this pair of currencies is going to push to the down. Typically, it's going to push to the downside. It's not 100%, but typically you can follow each of those moves and catch two trades. It's like catching one trade, two in one.
Correct.
Okay.
And Sharon, here's a good direction for you. Um, what's really going to help you, because I remember you saying that you were absolutely brand new. What's really going to help you, just like starting off in support resistance, you want to read your candlestick Bible and focus on support resistance. And you already have a lot out of the way because you don't just know things without ever seeing a chart. So I would go there as a newbie. I would go there, support resistance in your candlestick Bible.
Yes, sir.
And man, this UJ, I hope it's ready though, because up over here, actually, I'm looking for it on the hour chart. I'm looking for it to break this zone right here. If it breaks this zone, me myself personally am in the trade.
Yeah, that's a good trade, man. It's gonna be a railroad. So it's gonna railroad that, and then outside of the charts, the trade deal was signed, or the phase one. So we have a little time for a correction of all this impulse leading up into the trade deal.
True, we should do. And then the trade deal is tomorrow.
It is tomorrow the signing, so we want to be cautious, but investors pretty much know what's kind of going on already because they were already giving details of China's going to buy 20 billion. They could surprise us in the market. So first thing out tonight, maybe London, I'll start securing profits, sizing out of the trade, and just maybe let a small lot. Well, really with a news of this magnitude, I didn't learn my lesson. I want to go ahead and close out. I want to go ahead and just take all profits off the table and let the market settle before I re-enter,
Hmm.
because it can give us a lot of volatility.
Actually, I'm not even gonna. I'm gonna leave this markup alone. I'm not even gonna think about trading it because if we do get some kind of move, let's say is I do believe we're gonna get a move, but it's gonna bounce in this zone up until news, and that's really it'll be something. Something's better than nothing, but I would just preferably just not mess with it.
I agree, man. You Jimmy, wait for the market to come to you. Wait for your setup.
Correct. Here is EU. Now, not only when I marked this, I seen all the trades that I missed, but I do see potentials now. We have taught by that man's to yours truly, hidden diversions that I found here, and Well, I do believe it's over here, but this was kind of the market kind of, they when they give it to you, they're gonna throw it out there in a form where it's likely you're not gonna catch it. So this gave me a downside move initially, and when I was monitoring it over here, because I had a trade since right here that I had just took profit on somewhere around here. No, actually, I think it did all this. It came all the way back around. It was somewhere around here, so I just recently closed that. I just recently closed that. But here, in this area, in this zone, was EU is not going to bank out tips like the GBPs, but it is very volatile. As you can see, it's very volatile. This is a newbie pair to me. This is a beginner traders pair. You know, this is something that that you know you're learning to mark up your charts, and you can mark your chart up, and you can let the market do the rest. And this pair right here is going to give you, actually, well, for me it was I might be a little more emotional than others, but it was a it was like it was when I marked my charts up and I let the market do what I do, it was making me and breaking me in confidence, But just for newbies, I would look to EU just just for volatility. It doesn't pump out a whole lot of pips. It won't kill your account, but the volatility is good. You can mark it up as best you can, and you can let the market do what it's going to do. I was,
I agree. Hey, D, are you on your headset?
yeah, I am.
Oh, I don't know, maybe it's me. I need to turn on my mic. Can everybody hear?
He does go in and out.
Yeah, you
Oh,
go in and out, but
Is
I can
this
hear.
is this better?
yeah,
I can hear
that's
perfect.
man, that's
All right,
time better.
all right. My volume was down really low. All right, that XRP trade. Look at this markup. Don't worry, y'all. This isn't a real trade. Do not get excited. Do not get excited. Stay humble, y'all. Stay humble, y'all. This markup from January 8th, but I did more than over leverage. You know what I'm saying? I put $100 pip move on this trade, and but I was just surprised that it honored my markup. Like, and I use everything possible. Like I use my fibs, you know, like I did all this. I waited till it came back around, and like all that, I did all that. I waited till it came back around, and then once it broke here, no, my bad. Once it broke here, once it broke here, I'm gonna put a line there. Oh, trading is real flaky. There we go. Once it broke here, I took the trade. I it's a few things that we use. Actually, you can see these two small arrows. This indicates actually two trades. This was the first trade was the over leveraged trade. This was the normalized trade, like a standard pit. Like a lot of times I don't need to, I don't mean to do this, but you when you have it, and not have it like that, but when it pops up and you get to pressing those zeros in, a lot of times I would type in more than 1 0. But I took this trade. I waited all the way until it came back around, not from here, but to here. And once this candle broke 50% of this candle, I took it to the upside. And I was real lucky because it was, it was respecting, like this is a crypto. Don't have to honor anything, but it respected this price line. It really respected this price line. Bounced off, came back around, and bounced off another previous support and resistance to my right and my left, and then shot up. So initially, this was more than 15K. This was probably about 25K.
I ain't mad at you, man. Ain't no need for disclaimers. We all know this is education, Zoom. I was gonna say, it's more of the process. So what we're doing is getting attuned to completing the same exact process every time we're in the market, and we're like I always tell you, D, we letting the probabilities play out. So
Correct.
eventually, the odds are gonna be on our sides, and we're gonna catch trades like this that we're able to leave in the market and leave them running, and we're able to catch the potential, or catch the full potential of the trade.
Which which is leading me to say, just to correlate with what you just said. Anyone on here that's new, please do not do not get discouraged watching the market do what it do. Don't.
Man, thank you, because it's set up. I mean, some of the sharpest minds, they set up and they run price to get you to throw you off, for lack of a better words. They want to get you exhausted mentally. So if you notice at the times that you may be getting ready to go to bed, you're tired of just looking at the market. That's when the moves happen. They kind of, it's all human psychology. That's the best thing I can put. The market is a participant or participation of an auction market style. It's really just a live auction, and there's nothing but human psychology at work in these candlesticks. That's what's making the visualization, or bringing about these sticks, or it's someone that's putting in the buy and the sell order. So we don't want to be, just back to what Daniel was saying. We don't get overwhelmed, don't get discouraged when you're seeing a lot of these sharp movements and things of that sort.
Correct. Because watching as a newbie watching the markets, it can kill confidence. It can get discouraging, and
I agree.
you're gonna have to have some kind of fire. You're gonna have to have some kind of light in you that's particularly strong enough. So that's particularly strong enough that you can withstand these things mentally and emotionally.
What I say, what they call it, dexterity, tenacity.
Correct.
So I mean, that's why we spend a lot of time. And me and Daniel was talking about this the other day. Like, typically when I kind of introduce people to market, we generally, for the first few weeks, we're not really even looking at charts. I'm sending over different things as far as psychological, like motivation, things to prepare us for the task of being in the market. Because on the flip side, we're not having to go clock in. That's the goal. We're becoming our own bosses. But on the backside, you are doing a lot of mental work. So there's things like staying active, listening to things, easy listening type of music, meditation. Um, I don't want to say ritual, but routines, things that just kind of prepare your mind to be able to monitor price. And one of the biggest tips I can say, not to carry on, the biggest thing I say is start at higher time frames. If you want to stay away from all the whipsaw and the volatility, or the fake moves, you want to, focus a little bit more on a higher time frame.
Correct. Like, for example, I'll give you a quick example here. Like, you do see wicks, but the candles are a lot more cleaner. You do see wicks, but the candles are a lot more cleaner. But now check this out.
Whoa.
Try to trade that.
Yeah, good luck. Stop out.
Try to trade that. Here, it starts to get better. Here, it starts to get better here and here. And then, this is like, this is the standard. This is the standard of, this is the base chaos right here, where it gets better or worse depending on if you go left to right. But then boom, as you see, we got wicks, but they're much cleaner. We got wicks, but they're much cleaner. The candles are much cleaner. We got wicks, but the candles are much cleaner. I mean, cleaner. When I say we got wicks, but the candles are much cleaner, the candles and the wicks, they're giving you better insight on confirmations. They're giving you better insight on moves, price action, and value.
Agreed. Yeah, those the keys, man. You really just only need price and volume. The indicators that you see a lot of people fill the charts with are just simply confirmation, and truly they're a lagging form of that. One other aspect I can chime in on is that when you start breaking down how the market actually runs, it makes the charts make a lot more sense. When you start looking at the charts from a perspective of price is going to go to the highest bidder and the lowest seller, you'll start noticing points where the banks and institutions are going to participate in the market. And you kind of come in with the thought or the theory, like would a hedge fund or would a bank want to sell this low? Like it's so cheap already. Why would they want to? You start asking yourself questions like that. Why would they want to participate at such a low level? So automatically kind of builds your bias that based on what you see in the candle. Now you're getting a more understanding of what the market is trying to tell you.
Speaking of decently volatile pairs, good for trading. Here's another NZD-CHF. It moves with similar volatility as Euro USD, but outside of certain trading sessions, it's slower. Like you'll find this moving good, like Euro USD inside of the New York session. You'll see it starting to move during the London session. You'll see it pretty much not moving at all, just like you see right now, because we're in the Asian session.
Man, that's a golden point, D. And excuse me to keep jumping in, man, but
Go ahead, brother.
Just to add on that, you have to know what times you're trading in. So just recognize when you're trading. Just for any of the newbies out there, you can't, it is a 24-hour market, but like you was just saying, they move different at certain times of the day. Asian is usually consolidation, except for JPY pairs. The London and the New York, just to reiterate, is the times you're going to get the movement or the most opportune trades.
Correct, and that leads me to tell you that I even found out my problem. I was trading pre-London. Like I was trading with no volatility, and then when the volatility came, the volatility was utterly biased. So let's say if I was trading during volatility, my bias will be a lot more outright. My bias would be a lot more confident. But as I've just started seeing trading pre-London with no volatility, like you see this is still a valid markup. I hit 1 TP. You think this happened during, I hit 2 TPs. You think this happened during London? No. No, it didn't.
New York.
Correct. It happened. This didn't happen during Asian session. This happened like
During London, huh?
between London and New York. Like let's say the first TP came during London, and here's the preset right here coming into New York. New York gave me the second one. Now we're back in Asian doing the same thing that we were doing over here. You get it?
Yep, it's the Asian range, and that's why if anybody heard of the London breakout, that right there gives you the the thinking behind the London breakout, why it breaks out like that. You range for Asian, then London, you get your volatility boost, and you get a breakout to the upside or the downside. You can catch the initial wave, but sometimes they do fake you out, and they'll come back up in a reverse direction. So there's ways to tell that as well based on different patterns of structure, as far as like W's, M's, the highs, the lows of the days, different candle structure, just different things of that sort. But
Like,
yo, man, that's a good example, golden example.
here was my entry for this trade. Since we have this order block so small, I don't need a whole lot of room to break the percentage needed to be able to take this trade. I didn't need it.
Yeah, that was a nice trade.
And I waited. I waited hours. I waited all the way until it came back around. And I thought it was going to come back around up to here. Or actually even it was going to do it up here. And then, give me an impulsive move where pretty much it would take the same amount of space as this candle to be confident enough to jump into a trade to the upside or something like that. And then it didn't give it to me. It gave it to me right here. And so, yeah, but at the end, that was my problem. I was trading pre-London, and the volatility inside London was biased. It was biased. And so if I traded during London in New York, I did it last night. I stayed up the whole London and part of New York, and I was just like, wow, the volatility within London and New York versus Asian. Asian is not even a session to be considered no more. Asian is the fake out session.
It is. The only thing that you want to focus on during Asian is JPY pairs. Those the only thing that's going to move. But, yo, man, my hat's off to you, man. You study to show yourself approved, bro. So I've been seeing you work, man. Probably it's good to see. With the starting of the London, man, you'll see those kind of like fake outs. It's kind of like the market is setting itself up. Basically, they're collecting orders, so you'll see a widening of what they call the spread or the ranges. So there's going to be, like you say, you have a markup already, but it's going to widen up because there's going to be so much more money in the market. So it's going to widen compared to your predetermined markup. It's not how I want. That's the best way I can think to put it on the fly right now. But based on the points of reference or structure you have marked up, they're going to widen that, so it's going to move a lot more volatile. Of the range of movement is going to be a lot bigger. So there's opportunity for it to hit stop losses based on the markup that's already set before London. So you have to account for that with either having a little bit of water of stops, or actually readjusting it and seeing what the market's doing right at London, not necessarily trading it or already being in a trade, but kind of getting your bearings going coming into London.
Correct.
If that makes sense. But yo, man, it's nice to see, man.
It's one pair I'm real biased about it.
So you see how they did me last night with GN.
Mm-hmm.
One of my stops got hit, but then they reversed and it went for crazy pips. It went for like almost 200 pips. in my direction, but
GM,
um,
right?
yeah, they just dragged the price down and down. I should have just held the trade, but it's always proper risk management. I went to bed, but if I would have stayed up, I could have hopped back in the trade and caught a nice trade to the upside. But
Here it is, right here.
yeah, yeah,
Once it, once it, like I didn't take this trade because it was pre London. I didn't take this trade when the volatility came. It broke because if you remember, it was pre London and we was just real biased on what it was going to do because the market wasn't doing
yes, sir.
it. And
And that's just generally how they run, though. They'll do a fake to the downside, collect the orders, and then snap price back um, to a portion where no one has to get out. I think me and you were speaking about that, how they um, they break it to the downside, and then what they're doing is they're clearing the board, so they're collecting orders on both sides. So you'll have people that was buyers getting stopped out. You'll have sellers getting stopped out. Um, well, in this example, you see that people could have potentially bought in this area. So they take the price down and they stop out the buyers. They show everybody that they have a break. So breakout traders are starting to participate, and then that gives them the momentum because there has to be somebody on both sides of the trade, buyers and sellers. So that gives them the momentum to take the trade in the direction that they wanted to take it to the upside. And now they just kind of caused a catalyst, I would say, to be able to have enough momentum to move price up because they didn't trap sellers and they didn't trap the buyers in that one play.
yep.
So yeah,
Now,
they're pretty they nice with it, man.
now we have a new move in divergence, and I'm going to say this is pretty. This is more accurate. This move in divergence is more accurate. This is give us a wider scale projection on what the heck did that just do? All right, give us a wider scale projection on direction. Or I could just do this like I was taught. Leave out the wicks.
Yo, mic check.
Uh-huh.
Okay, yo, my computer died on me.
Okay. But look how this is when I just corrected the divergence. See right at divergence and price and value. This trade ended. Came back to price, closed out, and opened up for that same long position you was hoping for. That's crazy. Actually, if I put divergence here or even here, I'll put these trend lines here or here. Having the better you get at this, the more of your light that you put into this, the more of you put into this, the more keener your eyes are gonna get. Me without the eyes that I have now would have seen this as a fake out. Would have seen this as a fake out. But no, with the keener eyes that I have now, oh, this is the move I've been waiting for.
Yes, sir. Oh man, some nice entries, bro. Well, I just want to ask anybody in the chat. I know y'all been hearing us go back and forth. Did anybody have any questions? Anything y'all want us to look at? Any charts? Y'all want to jump in a conversation or anything like that?
And it just broke a zone. You see that? Just broke a zone.
Still though, it's Asian, so it's gonna whipsaw right now, man. zone.
Yeah. But you know, when GN whips out, GN can still pay you.
Yeah, it can though. You get on smaller time frames, yeah, it'll move.
Like, let's say this move right here, 206 pips. This same move in Euro, 57, 60 pips. Same move in Euro USD, 57, 60 pips, something like that.
Yeah, they don't call it the beast for no reason, man.
And then I'm on the chaotic time frame. All right, that's a lot better, ain't it though? That is a lot better. Better sense of direction too. Oh, see that? So I did mark this up somewhat, or started to, did something else.
Yeah, man. Like we was kind of not debating. We was kind of conversing last night, man. Stick with your process, but just use them higher time frames to kind of, like you say, it's a lot smoother. So you can kind of see a little bit more direction, and then you know your entries based on your technique on that 1 hour or even lower.
Admin, look at your move, bro.
One more time.
I said, look at your move. And where we at inside? Where we at inside your move? Yep. We are bouncing off. We are bouncing off train, bouncing off diversions. We are bouncing off diversions, bro. About to go your way, right?
Yeah, it should go up there. I told you I was looking around the 2 point something range.
Mm-hmm.
And then you know the a nice drop. But I'm just kind of I'm not even in the trade. I should have just held all GBP since a couple of days ago, or really weeks ago when I first called it out. But you know how it go, man.
Yeah. But that, I mean, here you go, right here. You have
Yo, it's a nice. But personally, I'm away because after last night, I learned my lesson with GN participating early because that they always try to pull. They kind of try to shake you out.
Huh.
So they'll pull it down to the opposite direction and then go, go either bullish or bearish. So I'm gonna let them go ahead and make they first little move. I'm gonna let them play first tonight.
all right, but no, it's not nothing happening now. Like while it's playing in this channel, I'm not playing with it. You know what I'm saying?
No, I hear you, but I'm even talking about after the breakout.
Oh yeah,
I'm gonna
after
let the first
breakout.
initial breakout happen, and then I'm gonna respond accordingly. So if I get a nice push and then I get a continuation of that push, then I'm gonna jump in like as a confirmation. The other day I wasn't taking a confirmation and they whipsawed me. I call it they either push you out the market or not. I don't really say fake out, but they pushed me out. So
I want to say that here's your zone right here. Like I know the zone is huge, but this is the zone that's gonna confirm your breakout to where you is looking forward to it to go. Right here is just like the zone it's in right now. This zone right here is the same thing it's in right now. So if it breaks this, it's going to enter another zone.
yeah, that's all the market does, man, is a zone hop. It goes from zone to zone, and there's really no market without consolidation. I don't want to bore people with theory, but they have to collect those orders with a consolidation. So you'll go from one zone to the next zone, you'll consolidate, and then you'll go to another zone, whether it's bullish or bearish. You also have the technique that everybody likes to use, the 1, 2, 3. So you'll go 1, 2, 3, and then you potential reversal.
Watch out for that 1, 2, 3 thing.
Because you can see a fourth level, you can see a fifth level.
6. I've seen 9. I've seen 3. I've seen 3. Three levels in the same trend. I've seen 12. I'm serious, man.
I don't doubt. I've seen it too, man. So that's why we always subscribe more to, like I was just saying earlier, the market goes to where it wants to go. It's going to go to the highest bidder. So if somebody's willing to pay you know, somebody got Trump money or got not Trump, got old I don't know why his name, but the guy that owned Coke, somebody got that big boy money. They can pay. They take the market wherever they want to take it.
But this is it. This is the move. But then check this out. This move to your upside is gonna be a lot of tips, but it's not like the comparison of the correction that this has to make is far beyond that. The correction that this has to make. Wow. Yep. And then it has to do more than that, actually. This has to do a lot before it even call itself considering to be an upside trend. This has too much to do on the downside to even be considered, to even be thinking about going upside.
Yeah, on that time frame, we wouldn't consider it. On the weekly, we're not considering the full bullish
No, not at
trend
all.
reversal yet.
This is overall like this is what's telling me that they got too much to do. This is what's telling me what's coming in. This is the near future. This is happening now with patience. And this right here is pretty much no different from 4 hours. These are happening right now, but with patience, with due diligence, patience, risk management. This is happening right now.
Yeah, hit the daily, and I just thought of that guy's name, man. I don't know why Buffett. I don't see how one of the greatest investors, how I couldn't think of his name, Warren Buffett. Squeeze it up a little bit, like zoom in, like make it smaller, but show the right side of the chart still, like current price.
Okay. Go left more.
To the right more, like where price is currently.
Gotcha. That's better.
All the way to current price.
All the way.
Yeah. Okay, now make it zooming in. Like make it smaller. The bar. No, excuse me. I said zoom in, but zoom it out to make the bar smaller where we can see the whole, like a lot of the chart.
Okay.
But hold on, man. Let me see if no, I can't. I'm on the phone, so I can't take control. I still want to see current price, but I just wanted the bars to be smaller so we can see structure.
Oh, okay. Let me see if this is better.
Well, anyway, there's a point there, man, that it looks like it could form a big W. And as a reference, I was just saying, you know, they're gonna take the price wherever they want to. So it could be the start of the bullish move. Long term, technically, it's still bearish, but we're on the way to a breakout. We're at a point to where if it breaks on this smaller time frame, like the daily, I'm gonna go ahead and consider it bullish. And then, like we were talking about yesterday, the markets are fractal. So eventually, it moves up to the weekly time frame, and you'll start getting your your bullish view on the weekly, but it has to work its way up the chart. So like you were just saying, the smaller time frames are just an earlier indication of what's going to happen on the later time frames.
And I do see what you're saying about over here. Now this was huge. This was huge, and it completed. And then it made this mountaintop, this bridge like mountaintop. And I think our third touch is gonna come from there.
Yeah, so we just react, man. You know, I don't know. People always trip when I say that, bro. But it's been giving me the best results when I just come into the market with I'm not sure what's going to happen. So I try to plan on different strategies, not even strategies, but different ways to react to what price wants to do at key areas, key zones. I like to call them buyer and seller areas, and then I react then. But you know, long term view, man, it could give us a move that most people won't even expect, which would be this huge W, because we fundamentally are outside the chart. Investors, what gave us the downside move is investors reacted to the threat of a hard Brexit. So with them having hard Brexit, everybody started selling GBP, but they could have moved, they jumped the gun in a sense, and my belief, because it wouldn't necessarily be beneficial for Boris to do a hard Brexit. So I feel like they may come to terms on some type of agreement before the end of the year to keep keep them in the EU, or keep the pound in the EU. And if that happens, price gonna skyrocket on GBP. Until then, everybody's kind of more on an optimistic, or not even optimistic, but they're more calm. So that's why we're seeing this up movement on GBP, because, you know, they're starting to see that it's not such a big chance of a hard Brexit. So they're starting to buy back into GBP, which is making it correct. And I potentially see, you know, it's going to be some nice downside movements too, because I'm talking about thousands of pips. So we're going to see like swings of 200, 100, 300 pips to the upside and the downside. But if we get a break here soon, there's a point that I'll show out if anybody want to see it. But there's a point to, if it breaks, then we can see a pullback. We'll see a nice pull, and we may be already there, but we'll see a pullback, and then it'll stop at that same level, or give us a wick, and then we could potentially see to the upside. If not, then I'm gonna just play downside with them until they get ready to correct it.
To me, it just did. $160 pips. This is on the day chart. I'm gonna go to a smaller time frame and see if I could get the same bias. It's not making the W. It's making the M. It's making an M. You see that? And then this is only gonna grow, I believe.
Currently, I agree, but that, to me, that's the beauty of trading. Two analysts can see completely, totally different things, and we both can be right, just depending on how we execute the trade. So you take it downside, and I'm gonna take it upside, and we probably both gonna make money.
And not only that, this calls for a correction. This huge spike, this volatility, this level of volatility calls for correction. It might not correct this whole candle, body and wick, but let's see. It'll correct most of it. Here it is. Credential. Now, I'm not using my fibs. I've been getting better at this, but here it is. Boom. Boom. Then another retest, giving us a signal. I'm saying personally, me, giving me the signal. This broke well over 50% of this body. And then this actually broke this. Even though we're only 15 minutes into this, this candle also broke this. And I probably would have been at this trade somewhere around here. once it broke that zone, once it broke this zone right here, once it broke this zone, like once it came somewhere in the middle of this zone, I would have took the trade here and would have been looking towards the downside. But that's the thing about GN. Like this real simple move. Let's go 50% of this candle. This real simple move back to previous price is 111 pips. Really simple move, man. That's the thing about GBPs. All of them don't move like this. You have some that move, well, actually you don't have none that move like this. But you have those with high volatility in it that'll give you pips like GN, but won't move as fast. Won't move as fast. And don't get caught up with what's giving you the most pips or anything like that. Get caught up in the skill and the pairs with the pairs, especially with the base pairs, that's gonna give you the level of volatility and structure needed to help keen your vision. That's what I could. That's. I think that's the best way to put it. Don't get caught up in. Don't get caught up in this. These fast moving pairs. I would like to call them fast life.
Yeah, man. A lot of people, they put a lot of newer cats in trading want to trade GBPs because it seems like it turns more profit, but it's a double-edged sword.
Yeah.
You can get some good trades, but then you can blow your account.
Not just that. The next thing you know, you're discouraged with a dead end 95. You're discouraged from trading with a dead end 95, and it done broke more than your confidence. It done hurt you spiritually.
Been there, man. It ain't for the weak.
Not.
But success isn't easy, man. So, we got a lot of I see a lot of potential in the people that's kind of joining in the mix, man. So hopefully, I can be there and we can just all grow together. Yeah, I'm just excited to see everybody blossom, bro.
Yeah. Let me see something. I'm gonna wait for this to finish. I'm gonna wait for this to start to wick off, to come back in this area right here, and then I'm gonna throw. All you need is a small lot size for GN. I'm gonna throw in a small lot on GN just to see what it does, because this is here was the move. Here was the move, I believe, a fake out to the upside. Not right here, but when it came back around and was supposed to do what it do, it didn't do it. It didn't do it. So the move was here. The move to the upside was here, but not in this bullish run here. The move, it started here. Here's where you started looking. Here's where you started executing, and it didn't do it. It didn't do it. It's actually right now as we speak, these blue lines here, how it's respecting price and previous support resistance, and it's doing a lot. It's doing a lot of respecting, which should tell you right now, stay away from this pair. Stay away from it, at least until you can start seeing. But that's all I got. You can take over, man.
No, man, we appreciate it all, man. We appreciate you giving us a walkthrough and giving us some examples to look at, man. It was real thorough. I thought it was a lot of value, bro. So I appreciate letting me chime in and tag team with you. Was there anybody else? Because I'm not on I had to put my computer on the charger. So was there anybody that had any questions, any pairs or something you want Daniel to mark up? We can get his viewpoint on it.
Yeah, because I got more if anyone wants.
Yeah, no, I'll shut up this time, bro, and I'll let you just work. You know, I was just kind of dialoguing with you.
Okay, we got 7 participants. And we got 2 people that I've been waiting to see in here myself. So, all right, that's cool. All right, so
I think Miss Sharon had to leave. Let me ask her a question. I don't know if you're still on here, Miss Sharon, but I'm not sure. I'm in Texas. So, you know, it's not too far away. So maybe we can link up soon one day. And I'll check my resources to see if anybody I know that's in Oklahoma. That's a good idea, though. Like you said, that trade houses.
Well,
Um,
I'm sorry, excuse me, everybody. What part of Texas are you in, Nick?
I'm in West Texas. I'm in a little city called Lubbock.
Oh, okay, I know exactly where you at.
Okay, all right. You in Texas too? Or?
Yeah, I'm in Texas, but I'm in Houston.
Oh, you're in H-Town, huh?
Yes, sir.
No. Yeah. So we definitely, it's gonna be overdue. I got some things in mind and plans. So yeah, maybe we can. That'd be cool for everybody to link up and we just have a nice little trade when the time's right. We'll link up and just trade.
And that's definitely, I'm with it.
Yeah, yes, man. Yo.
all right, I do have more if anybody's willing. Like I can actually go through my little structure on how I appropriate risk management with volatility when it as much as this sound like it don't go together, it actually really does. Like how I was just explaining here in GN, you don't need any kind of lot size. You don't need that you just don't need that noise of the lot sizes that's going to kill you with the volatility that this offers. Now here's the pairs that I formally trade from lowest to highest volatility. Number one is EU. The second one is AU. The third, NZD CHF. The fourth, NZD CAD. Now, when I got to NZD CAD, now we get into pairs that's starting to up their level in volatility. So that was 4. And last but not least, wait, not last but not least. Where is it? Here's another one on the same level as NZD CAD in volatility, and then right here, Euro GBP. It's on the same level of volatility as all those other ones, and it can also up its game at times too. It can get on a level of volatility as like GJ or EJ, but it won't get on the level of GN. And then when I really want to when I'm really feeling myself or want to test myself, these two, GBP Swiss and GBP CAD. I really don't do G-odd or GN. I really don't do EN or EOD. I don't do Euro CHF. Euro GBP in volatility is the highest I would go, me personally. It is the highest I go in volatility. And then like let's say with Euro USD, not because of its volatility, what the volatility in this does, it gives me the time, it gives me the time for a proper markup and a more confidence bias where instead of putting a 10-cent lot, I might put a 30-cent lot, something like that. Euro GBP, things like this, nothing more. And I mean, seriously, like nothing more. I don't need nothing more than a 20-cent lot. Like the 20-cent lot is the highest that I go in this volatility. And here I just missed this one. This bounce off right here. And then cut it. Then we have what we have down here to look at maybe. Or actually this was a quick upside. This is a quick upside move. See, this is how I know I'm starting to get the little vision. That I'm starting to see it. But we'll mark up let's go with I like the smoothest of GBP Swiss. I like the smoothest. I like the smoothness of it. And these are some special fibs. If you guys are interested in these fibs, you know, I had a talk with the creator. He just wants me to just let everybody know that his Telegram chat is called AQZ chat or AQZ zone chat, and he gives out some free sauce with these fibs. I think he just started doing that. He gives out free sauce with the coordinates of this fib. But this is an up move play, but it took a while to play out. As you see right here, I was waiting for this to break this to take the trade, and I missed out. I actually missed out. I actually missed out on this one. But this GBP CHF move, notice how in GN it was like 160 pips for a move for this size right here. Right here at GBP CHF, it's only 90 pips, but that's still some high volatility. That's still very high. But for example, look at the smoothness. Like you guys might see something else, but I can go through here, even here if I wanna get real technical. But as I'm getting better, I'm wanting better moves. You know, I can go here, and I can find this 90 pip move right here, either bullish or bearish, and give an entry and an exit. And when it comes to entries and exits, entries are important. Let me guys give you my this isn't a Forex disclaimer, this is a beginner's disclaimer. More or less a real kind word. Here's where you started. You don't really know anything, but you have the chart in your face. You have the he say, she says, and 200 EMAs and 50 and things like that. And you just have this sense of it. Now, here's your direction. That's going to start helping you seeing better and helping you understand the language. And I'm not saying decipher the language, but understand it better. As you already have the chart in your face, what you want to do is you want to read your candlestick Bible. With your candlestick Bible, well, you want to read your candlestick Bible and you want to learn about support and resistance. With your candlestick Bible, you're gonna start seeing support and resistance. There's your beginner right there. There's your direction to the door, or down. There's your direction. That's the right path. That's the direction on the road that you need to be on. Study support and resistance while you read the candlestick Bible. And then for any further sauce, I would recommend that you DM at men. I would recommend that highly, that you DM admin, and because the steps that I just suggested, recommended that you take, you'll start to see how, not how he sees it, but not why he sees it. You'll start to see things like what's the right term to put that? When he sees it, and like when, what, and why is in correct order. Yes, when, what, and why is in correct order. So what I might do here, because I'm starting to see different, is I'm gonna mark this up actually. Uh, I think I'll probably go. mm, mm, All right, here this indication is kind of giving me an upside move. I'm gonna go on a higher time frame, and this puts me in a real peculiar place. It puts me not at a place of indecision, but a place to start looking, a place to start observing, a place to be alert of. I'm gonna go to a higher time frame. Oh shoot. Uh, Actually, we're right there for a quick bullish run. And the daily is very biased as far as direction. All right, continuation hit to the downside. 1 hour. That's on the daily. Continuation to the downside of the daily. Uh, Continuation to the upside on the 4 hour. And we're almost too late to get in this trade on the 1 hour. Now I'm starting to get biased. I'm starting to gain bias from this area. This zone right here. I have bias on what the market is going to do. So let me just let me find good. This may be it right here. Wicks and candles, it's gonna, you know, in the near future, just so you know, you're gonna be taught different on the adherence and importance and the level of importance of wicks and bodies on the candles. That's another thing that you guys can pay attention to. It's gonna be up to you on which side to take on the on wicks and bodies, because people are gonna have a lot of different. People are gonna be very opinionated when it comes to wicks and bodies, and I want to say that there is a wrong way, and at the same time there is how. Let's say the right way is in diversions and trend lines, which don't matter. The way that they appropriated risk to the point where they made it so that it can matter, or not even that it can matter, that it does matter. They've appropriated a way for that. So that's going to be up to you. But when I use trend lines and I don't use wicks, I get a better sense of this. I get a better sense of the zone that I'm in and the potential breakout versus versus uh versus using wicks. Let's see something here. Oh, that's not right. This isn't the true diversion. This isn't the this isn't it. This must be it. This must be it right here. Then maybe even this needs to be out there because we have a real smooth line. We have a real smooth. It's real smooth right here. All right, here's our channel right here. Here's our channel, and here is. Let me erase the zone barrier. Actually, I can probably just make it clearer. I can probably just, come on, man, what is that? That's better. All right, and I have here. I have here first breakout level. Now, don't get me wrong. For it to be a valid breakout, it has to break out of this zone. That's the safest way to take this trade. If it completely breaks out of this zone, if you have even if you have odds good enough, you still are not going to be 100% on taking this trade. But but me, I'm uh I'm I'm thinking about if it breaks this, it's going to give me it's going to come back to a certain level where it's going to give me enough pips and volatility where I could actually make a profit. 38 pips. No, actually 33 pips if it breaks this. And then let's see. Ooh, this one's kind of. You just can't. You just actually can't even. You actually can't even really see the direction. But yeah, this is it right here. This is the zone. This is the zone. This is a it's highly close to breaking out of this zone to the upside. First off, versus if it breaks here, we're looking at a short move, and it already gave us what some would call a mountaintop or a crown It gave us 3 points. But I'm gonna say that, let me actually mark this. I'm gonna mark this for the upside. Let's see where, come on now. Let's see what it puts us at.
Say D.
Yeah.
I gotta catch a call, man. I'm gonna dip out, but if y'all still on, I'm gonna jump back on.
All right, go ahead, brother.
All right, bro.
All right, so this just gave us, this just put us in the area. This just put us in our breakout area. So where I just marked that, where I just took that candle and put it with my marked doji, I just got the same area for the breakout to the upside. But this is coming from here. Now mind you, this is a candlestick formation that comes with other candlestick formations that turns into a pattern. Now this dragonfly doji eventually turned into an order block for a downside trade. But this is such a, well, no, because of volatility, it's not so short. But this is a it would have been a nice trade, but at the same time, like I don't have all the tools that I need, because I don't I just don't have them. Like the best tool that I have for this kind of stuff is trading view alerts, where I would have taken this trade and had an alert me once it got, this isn't my take profit right here. This is where it went. But for a safe take profit, this is where I would have had an alert and my take profit. I would have had an alert and my take profit. And notice diversion coming right here. It's nearly touching. And actually, if I line it up correctly where it's on the edge over here, now it actually is touching. So we have our channel. And not only do we have our channel, but from this line to this line, from confirmation here, we now have our true zone. Let me see something. If I could still bring this to touch correctly. Yep, here it is, right here. Boom. Right here. We have our true channel. We have our true zone. And we may have a short move to the downside. If you notice, this red line is blue line. This is the breakout area, and not just the breakout area, but previous support resistance area, not just to the right, but to the left. And this, depending on how much price respected this area, depends on how strong this area is. And as we can all see, not only did it keep retesting this area as a ceiling, it consolidated in this area for a while. Doesn't necessarily mean it's going to do that here. We really don't. But we have more in this zone to look at before we consider a breakout. And there's nothing in the market that calls for a correction to bring it all the way back down here. Well, rather small. My bad. See, here's my eyes again. I caught it. There's a cause for a correction from this impulsive move over here to over here. It didn't correct here, and I'm not gonna say that this was impulsive, because this was actually price action and volume. This was the market doing what it's supposed to do, and the correction may be coming. The correction is coming actually. This is what I believe. I'm gonna save this, and then I'm gonna copy a picture of that, and I'm gonna put it in chat really quick for before and after. And then you guys look over here to on my cursor inside where my mouse is. Here it is. Acquisition zones and AQZ markups. If you guys have any questions on the fibs that I use, the fibs I use has nothing to do with my my trading style, anything like that, my technique, anything like that. All right, and then what we're looking at is a slight correction that wasn't able to happen over here. Like let's say, for example, this correction, the correction called for this area happened immediately over here. If I zoom out, the correction for this impulsive move happened immediately after. It's not gonna always be like that, you know what I'm saying? Because I can zoom out on a wider scale, and I see an impulsive move that still hasn't been corrected. Look at that. But if we zoom out even more, let's see, let's go to the day chart. If we zoom out even more, we have other corrections to correct. We have other corrections to correct. And if you guys haven't noticed something, check this out. Coming from left to right now. Just keep your eyes on it, and then I'm gonna tell you. Before this move, this major move to the upside on GBP CHF, on its way from left to right now, it's been correcting itself, getting ready for this huge price action move way back up to like 2.5. Price is currently at 1.26 something. That's nearly double of the correction. As from right to left, as you can see, along the way, it's been correcting itself. And I'm gonna go back down to the hour chart. And let me see. Oh, this is gonna be a nice one. First level, like we passed this area of importance. We passed this area, and this area of importance over to the right. I mean, these three left areas of importance, 1, 2, 3, we passed them over on the right. 1, 2, 3. Now there's nothing stopping us from getting to the next level, and with no corrections, from getting to the next level of first 85 pips, and then ultimately 140, and then ultimately a drawdown of 100 pips, which is still a good, like if you have the eyes, all the way back up to like 160 pips. So a drawdown of 100 pips, and then another shoot up to 160 pips, like another extra 110 pips. All right, something else now that I want to go through is it involves psychology. When you first start putting your own money in this, you're gonna be scared to death. Your heart's gonna race. Depending on your circumstance or situation, it could, if you don't have a strong enough light in you, you will scare yourself away from it. So I do in advance advise you. I'm not saying take baby steps. I'm actually gonna say something you may have heard very little or not at all. Do not worry about making money right now. Worry about getting the skill. I'm only gonna say that this time. Do not worry about making money right now. Worry about getting the skill. Seriously, I'm very serious. If I can say anything to keep you from making mistakes that I've made, that is what I'll tell you. I'm pretty sure everyone have enough common sense and not just common sense, but everyone is down to earth enough and have enough common sense to evaluate themselves on their level of trading right now. And then ask yourself, should you be putting real money in the market? I do have to, not to toot our horn or anything. Over at King Visions Forex, we do actually have some real traders. Like, I'm not just talking about any kind of trader. I'm talking about real cautious and careful traders. I'm not even trying to toot my own horn, but if you guys can, if you guys comprehended this markup and understood where I was coming from in my bias, I don't know, do something like drop a one in the chat. Oh, excuse me. That's GBP CHF. Current trade that I'm currently in right now. Valid markup still. Entry level. And I'm, ladies and gentlemen, I am past the point of what I'm doing in my trading. I am in the why I'm doing it. I'm past the when and I'm past the what. I'm at the why. I'm in the why I'm doing it. Current trade, entry area. There's a reason for this entry. People, they want all this. Me, I'm trying to prevent previous mistakes. I'm doing it the way it should be done. Entry, and still caught my first take profit and my second take profit and some. And with this, let's say usually what I would do is every line you see starting from right here, they're not colored and anything like that. It just took too much time to do that, especially when I was throwing out trade potentials, and it's not that I don't do it anymore because I don't care about it or nothing like that. It's just that it takes a long time. And so what I started to do when I'm throwing out potential trades, I'm I would commentary. I would commentate. I would use this. I would use that. Stuff like that. Yeah, I have my entry, my first take profit, my second take profit. Usually these three arrows right here, notice how they are like on the money of not just support resistance, but take profit and look for reentry, look for possible reversals, look for possible uh, consolidation. This is just an area where you just, all right, I'm gonna take what the market just gave me and see what the market is about to do before I decide to, this is a more safer route. These three arrows, while the what I just discussed and explained, this is just a safer route. And then, you know, I'm not trying to toot my horn because it's not smart for me still to not just let it ride. Like I marked it up. I marked it up. Like I do not lack in my markups. That's another thing. When you start learning to mark up, do not miss a single thing out of your arsenal on marking up your charts. Do not use a single thing. Don't. And so here it is. It's still my stop loss was real tight, really tight. Never even. I mean, it had no drawdown. No drawdown. My stop loss was really tight. This is how people want to learn how to trade. My admin, Nicholas at King Vision Forex, has taught me to truly trade. I'm letting you guys know that. Took me from scratch. And on top of that, personally, the man has a light in him. He's a really good guy. I'm not supposed to let this run, but since it already hit my second take profit, when I caught this I caught this like late New York, early. I caught this late New York I caught this late London coming into New York, and I was like, well, since it gave me that little space between my entry and the beginning of my stop loss, I just took profit while it was wicked out there to get my entire full take profit from two of my zones. It gave me 37 pips. Luckily, I did take profit because now here it is, 1, 2, perfectly respecting price. But the thing with the style and technique that I use, now I see this perfectly in respecting price. I can do something like go down to the 15-minute and look at, or you look at that, or you look at that. I have a downside. I have the same amount of pips that I just made within these two zones. I'm going to make that same amount of pips of it coming back down, but I'm not going to take profit at this zone. It's too risky. I'm going to take profit at my entry. It'll wick through the zone. It'll definitely maybe wick through the zone, or maybe it just may touch. Like I can have my take profit right here. I can have my take profit, man, like right here, and it'll just. No, I can have my take profit right here at the blue line, but it'll just barely got to it. It won't even touch the blue line. It'll come so close. Like what did I just put this red line, and then boom, I just lost some money. Another thing is securing your profits. Securing your profits. When they say take what the market gives you, that is for everyone, especially beginners. And as you begin to get more advanced, you start to take what you want from the markets. So current trade right there, but I'm still waiting to hit this next area of importance. You see this consolidation over here? You see how How price is respecting this line. Here's previous support and resistance. Here's previous support and resistance. Here's previous support and resistance. Here it is again. Right here is just so many different areas. This zone is gonna be respected much. It's gonna be respected much. I can tell you that. This zone is gonna be respected much. No, I'm not even gonna put it all the way up there, but I am, but it's gonna play within here, coming up to here, ultimately zigzag from top here to bottom here, but we don't know how long actually, but because this was so honored. This price right here was so honored. This zone, we don't know what it's gonna do. We don't know what it's gonna do. And then how even this arrow is here for a reason. And I move this arrow, and I use this arrow as a line of divergence. Well, I think it moved a little bit while something happened, but it actually, I use this to give me that confirmation to the upside. I believe that I put it somewhere around here. I believe I put it somewhere around here to use it for a line of divergence to give me a sign to the upside, like to see if it's gonna follow through, giving me all three of my levels of take profit before I really start to look and see what the market is about to do. Because this circle I'm making, what was this? This was probably about starting from here to here, maybe about a good whole trading week, Monday through Thursday. Probably, most likely, yeah. All right, so now, next pair that I wanted was here. This right here, this one scared me so bad. This was one of the charts that I marked up and colored and commentated on to give my different reasons for bias. And I'm glad that my bias gave me what it did, like the stop loss that it did, the diversions that it did, like starting from here and things like that. It gave me all that before this even happened. And if I'm correct, I took this trade. Oh, here it is, right here. Here it is. It gave me my first take profit, and I am a person that's, I'm not gonna say skilled enough, but I am a person that has an eye good enough to counter trend trade. So this gave me my first take profit from this pink line. No, what was it? Yep, from this pink line. No, actually, no. It is, okay. Where did I take it? There it is. Here's my entry right here to the upside. This drawdown scared me, gave me this drawdown, and then almost hit my take profit. But I held on, and I held strong. I was I was re I was redoing this chart over and over. I was redoing it over and over. I was checking again. I was checking for corrections. I was checking for news moves, market maker moves, just checking to see, like, okay, the market's just doing what it's doing. Okay, it corrected here, it did this here and that here. And someone just told me to hold on to it. And I was right. I even marked it up again. As you see this blue candle, I marked it up again. Like, why are they doing this? Should I just hop out of this? And then, boom, from this line straight to my take profit, the green line. And after I did that, I actually set that take. I actually set that take profit so that it could hit. It gave me 77. But in actuality, because I didn't take it right there, I didn't add on. I didn't add on at the bottom either. So it was a total of 77 pips, but I actually got out. I actually got out of it 48, 44 pips, and I held on to that trade for a long time. So if anyone could, if anyone could say that, if anyone can understand how I just put patience in there, I don't know. Give me a one in the chat. All right, right now, with the people that's on here, would you guys like to do a Q&A? You can unmute yourself. If you guys have any questions, I can answer them best as possible. Is that a no? All right,
The no for me.
it's a no for you. All right. Well then, I'm gonna conclude this message, this Zoom. I'm gonna conclude this Zoom, and I'm gonna hope that everybody, trade safely and take that trading serious to get the skill set. And I'll see you guys in the chat. I have some markups posted, more understandable than what you see right in your face. This one had me a little chaotic, but ultimately played out in favor. I didn't hold, which I should have, but thank you all. I did enjoy this. I did enjoy giving what I have. I have more, and like I was put right here on the Zoom because I am also a beginner. I am not a seasoned veteran. And so, yes, I do have more, and I'm willing to give it if you guys are willing to give it. All right, that concludes this Zoom. Thanks, everyone.